800-951-0592. Joe and Jason, Patriot Radio News Hour. Gold at 1,930. And again, I think the bias here looks to be to the upside. For a while there, we were talking maybe they're going to raise 50 basis points. Right now it's like it may be none. Plenty of people out there wanting the Fed to cut rates, wanting to stop quantitative tightening. The outlook here, obviously very bullish right now. $20 gold pieces today, and just get ready. I mean, this is just what happens here. $2,250 today. You're still saving. Listen, you're saving $15, but I'm telling you, Jason and I both know premiums have risen every single day since Thursday. Demand, I can tell you, just our business, demand is through the roof. The good news is, Jason, we're not back to COVID premiums yet, but I'll say this: no rate hike on Wednesday. We'll be at COVID premiums plus, and there will be lines out the door right now. Here's the good news: we're not, think at the height of COVID, we're saying, hey, it could be 3 to 4 weeks out. We're not there yet. Things are still flowing pretty smoothly here. That is not going to last. Listen, it's simple supply and demand. That you just can't go to a keyboard and produce more gold. You can't go to the keyboard and produce more silver. There's just a finite supply of it. US $20 gold, save $15 a coin, $2,250 at 800-951-0592. It is being reported here. Hold on, we got breaking news on Credit Suisse. These guys don't get it. This is what I call the kiss of death. Their chairman, Axel Lehman, was at some conference, and I want to say it was a Saudi conference of all places, and uttered the words, "Government assistance isn't a topic for the lender." Okay, so you know what that means, right? Everybody knows what that means, right? Oh no, our balance sheet is fine. Yeah, everything's great. Yeah, no, we don't need government assistance. Yeah, they're probably going to need government assistance. Shortly after that, after news broke that the Saudi sovereign wealth fund said, "Dude, we're done. We're done here. They're not getting any. We're not buying anymore. We're not going to go through the regulatory process. We're not doing any of that." The Financial Times is now reporting that Credit Suisse has appealed to the Swiss National Bank to give public support to Credit Suisse. In other words, come out and tell, oh no, Credit Suisse is fine. Dude, you're not fine. Look at the S&P just gave you a big slap on the wrist and said, hey, all of your financial reporting from 2019, 2020, 2021, 2022, they were all no good. I don't think that is coming. And they're saying that it will be inevitable. This is the Financial Times. The Swiss government is going to need to step in and will have to intervene and provide some form of a lifeline to Credit Suisse. Otherwise, it'll jeopardize Switzerland's reputation as a banking center. Jason, I think that reputation's already been jeopardized.
It might be toxic masculinity, but when you have to ask anybody for help, it's not a good thing, is it, Joe? Especially when it comes to banking. It doesn't matter who you're asking help. That means you can't get it done on your own. So,
well, this is the old, hey, forget about numbers. Don't do math. Just tell everybody everything's okay. The old competence thing. Which is, hey, listen, let's not mistake it. That's an important thing.
Yep.
We have lost some confidence in some of our lending institutions here in the United States, haven't we? We have.
Yep.
And I've been on the air now for since Thursday saying if you're a major depositor at one of these small financial institutions, what are you doing? Right? You got to get your money. You got to move it. You have to. You may not want to.
You say Thursday, Joe, but haven't you been saying that for a couple of decades?
Well, having your money in the bank's a fool's game, especially with inflation where it's at. And now it looks like we're not there. We're close. We're really close to the Fed to say, dude, we're unable to fight inflation any longer. That's a bad place to be. And again, remember the box we said they were in. There was no good outcome here. There was no landing. There was no soft landing. Look at what the bond market is doing. It's incredible what is happening. And what that means is anybody who had money, and I'm talking big money, they're like, I'm getting it out of my bank. Even the mega bank, I'm going to buy treasuries because I don't know. I don't know if we can get to the weekend. I don't know what they're going to do when the weekend gets here. And when they do that, that's money that's not going to be spent in the economy. This is kind of this self-fulfilling prophecy, isn't it?
That could be a way to slow down the inflation. I mean, if they get everyone to go for the direction you just described, Joe, I guess that's a way. You get some demand destruction happening here, the job losses.
It's called the depression is what it's called. That's what it's called. It's called the depression. I'll try to call it a recession. It's a depression. That
would speak very, very loudly to the fact that they would have to stop raising rates. And then if that kind of activity starts happening on a grand scale, Joe, then the inflation, I don't know if it would subside, but it would probably not burn super, super hot because obviously you need people actually spending money on things to push the prices. But it's a tricky territory, Joe, because it makes me wonder how much inflation is still going to be there if they stop raising rates. And if they actually consider lowering rates, what's inflation going to do if they decide to start doing the bailouts?
All right, I got breaking news here. All right, Credit Suisse default swaps. Wow. 2,700%. That essentially means nobody wants to trade with. Just to give you an idea, is that bad? Lehman Brothers, it wasn't even at 500 when Lehman went out. When Bear Stearns went out, it was actually below that, below 500. Something's going to give here. Something's going to give pretty quickly because you can't be in business if you have to pay that much money to get people to do business with you. Patriot Radio News Hour, this thing, man, it moves quick. (800-951-0592) if you're just joining us. S&P put First Republic Bank into junk territory. Moody's came out with a list. First Republic, Zion, Comerica, others, all on credit watch negative. But Credit Suisse now, contagion starting to spread. Several Italian banks had to stop trading because of losses. When they, those lock limit down, take a timeout type thing. The banks included Unicredit, Financo Bank, and then remember this bank, Monte dei Paschi, right? One of the oldest banks in the world. They were making headlines during the previous financial crisis. Credit Suisse, again, the rout continues here. Their credit default swaps have just completely blown out here. This is not good. Still no comment from the Swiss National Bank here. That's not a good sign because obviously they're involved, right? Obviously they're looking at it and they're probably saying to themselves, man, I don't know what to do here because we're not going to go out and tell everybody everything's fine because they wouldn't they have done that already?
They don't want to eat crow. They don't want to have to apologize for any disinflation statements.
Right. Yeah. I mean, this is This gets creepier by the minute here. It's just not good. There's no good solutions here. I don't know what they're going to do with Credit Suisse. I'll say this: wiping out the bondholders and wiping out the shareholders. That's a much uglier thing than we saw at Silicon Valley Bank. And what happens with depositors here? The Swiss, they don't have the economy that we have, right? They can't be, out there, taking on losses of hundreds of billions of dollars, right? They don't have that kind of GDP, Jason.
Do you think, and if this continues to go in the wrong direction, if we just say this is it, it's happening now, do you think they're actually going to go back somehow and point the finger at cryptocurrencies, Joe? The FTX failure, then Silver Lake and Silicon Valley Bank, all of them heavily invested in tech stocks and especially with crypto. Do you think this is what they'll actually point the finger at as the weeks and months to come, Joe?
Well, you think about the three banks that went under here. Very much, two of the three were essentially, for all practical terms, they were banks that dealt in the crypto space entirely. Silicon Valley Bank, heavy into those areas. So yes, I believe that wholeheartedly. I think this is something where part of the message that will be sent. It's kind of interesting because Bitcoin's had a big rally here. I have no idea. I don't follow it. I love the idea of it. It's already been ruined. But the reality is, if I was a Bitcoin guy, I'd be selling any bit moves to the upside. I'd probably be a seller. That's how I feel about it, because I do believe they'll probably come back and say, well, it all started with these crypto banks.
Right. And the crypto space is a growing larger space, but it would not create a worldwide banking, panic. Right, Joe? I always find it interesting when things start to go bad, when the finger pointing comes out. And I just have a feeling, because of a digital worldwide currency is coming to us, is this going to be the play in the end when things really start to fall apart, Joe? Hey, we got to put our digital currency in because, this whole failure started because of a bunch of twisted, messed up crypto guys, and they just messed the whole thing up. Ain't the Fed's fault, ain't central banking's fault. It's these crypto guys, right, Joe?
$20 gold, $2,250 at 800-951-0592. Apple says that it is suspending bonuses. Wow, could you imagine, right? You're working for, hey, I got a bonus. Yeah, the bonus check's coming next month. Apparently not coming. Apple says they've initiated a complete hiring freeze. Car dealerships, a report out now that car dealerships, the cars are back in stock, but they can't sell them. And now they're saying even the used cars, they're paying a lot more for the used cars. Even used cars, they're having trouble selling. And now they're saying that some of these car dealerships, Jason, are starting to hemorrhage cash.
I'm wondering if the auto shops are gotten really busy. Fix the old one, Joe. Is that the option, right? When the old one starts to have trouble, it's either pay for the fix or go get another one, right? And again, when
you hear stuff like this is their way of saying cut rates. Just saw Market Watch is reporting now that they're now expecting the Fed to have cut by a full point before the end of the year. Again, when we're talking about gold prices, this is the sweet spot, right, Jason? We kind of talked about this stair step up stuff, right? Hey, it's got to go higher as they slow the pace, then they stop, then they end quantitative tightening, and now all of a sudden, Jason, they're stopping. Tightening's got to come to an end. By the way, they're going to cut rates by a full point, probably start quantitative easing all over again. What a different message in less than 1 week. It truly is amazing.
Yeah, I'm not one that really cares about who's right or wrong, But if I'm right and the Fed is going to take charge and just start really hammering this system and keeping the rates high, things are still going to be good for gold, and the markets are still going to be terrible. Things are going to go crazy. But if Joe's right, which he's very much on the camp that we're going to see the rate hike stop and then possibly lowering rates. If Joe's right, you should have bought gold yesterday. So you better start every today is the new buying opportunity for gold if Joe is right. And Joe could very easily be right. Either one of these scenarios, is bad.
I'm just saying what other people are saying. Right? And guess what? I'm starting to go with those guys. We'll be back. Final segment, Patriot Radio News Hour. (800-951-0592). Gold's up 21 here, 1932. Silver's unchanged here, just below $22. The Dow down now almost 600 points as we continue to see the fallout. Regional banking stocks under pressure, led obviously by the news out of Credit Suisse. We'll continue to follow all of that for you. It's fast. We talk about it all the time. How did you go bank? Well, it's gradual at first, and then all of a sudden you're bankrupt. And this is what's kind of playing out here. Don't have that money. And I've been saying it for you forever. You can't have all that excess money in these banks, and they can't insure $9 trillion of deposits, which are uninsured, right? They can't make them all whole. It just doesn't work that way. $20 gold pieces today, $2,250. We are hoping, man, we have been chasing some silver all week. There's it's flying out the door. Premiums continuing to rise. Rolls of silver quarters at $225. Rolls of silver half dollars at $245 at 800-951-0592. U.S. Silver Eagles, man, the premiums on Silver Eagles shot up again. We're still nowhere close to the COVID premiums, thankfully, but you're looking at $690 a roll on U.S. Silver Eagles today, Jason. And again, as we get closer to Friday, are we going to see another busy weekend for the central bank? They've been awfully quiet here. Haven't heard really much of anything out of them since they made those moves on Sunday. And I'm sure right now, every one of those Fed people, they're on the phone to banks today. Believe me, they are. They're on the phone to Wall Street. They're on the phones to the bank, talking about exposure. What's the risk? Where's the capital flows going? What's happening with depositors, right, Jason? They got their hands full right now. This is one of those ones. This is not a drill. What happened to the stress test? Yeah, well, I can tell you what happened to the stress test. Stress test wasn't worth the paper it was printed on.
Joe, if you have a little bit of economic heartburn, right? Get yourself a couple rolls of quarters, right? Get yourself a couple rolls of quarters.
Alka-Seltzer.
That's what we're in.
On YouTube, you can see Jason's got a roll of silver quarters with the old Alka-Seltzer label on it, right? There you go. Great
grandpa, he'd buy the Alka-Seltzer bottles, and then when in 1965 he saw the silver leaving the money, he's like, well, it's time to keep all the silver change and put it away. What a good time to start doing that, huh, Joe?
Yeah, absolutely. That 10-year note, 3.42 right now. So again, heading back lower again, and that just the lower those yields go, the higher the stress level is. One of the people out on the idiot box was talking about the 10-year note could see 3.25. That would be incredible. That would definitely say to me, no rate hike is coming next week, but we'll have to watch. It's going to be really minute by minute, day by day. Still nothing out of the Swiss National Bank. The credit default swaps for Credit Suisse blew out this morning, blowing away the previous record from Lehman Brothers, which was about 400%, at 2,700% today. 800-951-0592. Get yourself covered here. Jason and I, we're going to come right back. with the half empty cup. God bless.